If you really want to buy a home, but you have no idea how to get started, this video is for you. I talk to a lot of people and meet with a lot of first-time home buyers, and the reality is they do want to buy a home, but they don't know how to get started. This is part one of a 4-part series on how to buy a home. So the first step, and probably the most important to get started, is to know what your credit looks like and understand your credit scores. If you've never pulled your credit before, you may have no idea what I'm even talking about. That's okay, I'm gonna help you walk through it. Step one is you need to get a copy of your credit report. If you're not currently working with a lender, then you can pull this yourself. There are several different websites that offer an annual credit report. As a consumer, you should be able to obtain a copy of your credit report every single year with no cost to you. To get started, browse out to an annual credit report site. I'm gonna put the link to a couple of those in the description to make it easiest for you to access them. Once you navigate to the website, you're going to simply enter your personal information. It's gonna feel a little bit invasive. They're gonna ask you for things like your name, your date of birth, your social security number, your address, and then they may even have some security prompts to make sure that you are who you say you are and to verify your identity. Once that step's completed, you should have access to an actual credit report that belongs to you personally. This report's gonna contain all of your financial information pertaining to your credit specifically. So it should list out any open, active, or past credit accounts that are in your name. The specific items you want to be looking for on the credit report are what accounts are being reported for your credit. Are those credit accounts in good standing, which means are you paying your bills on time every month? What are those credit limits and what are your current payments? Those pieces of information are what a lender are going to review and really be specific on when looking at qualifying you for a home. By pulling a copy of your own credit report, you are now going to be empowered to understand your personal credit rating and all of the information tied to your credit file. While you're reviewing the information, you may find things that are inaccurate or things that don't belong to you. You could find collection accounts that you possibly don't even know exist. So it's really important to get very granular, detailed, and specific when reviewing the information, checking for accurate information, but also checking for inaccurate information. The free annual report sites may not offer you a copy of your credit score, but they should allow you to access a copy of the credit report. Even though the score is really important for qualifying, starting with a copy of the report itself so that you can make sure that everything is accurate and reporting correctly is step one into becoming a homeowner. If you're already working with a lender for a pre-approval or you've started the process in some way, you can ask them for a copy of the credit report that they pulled on your behalf. The lender's report typically is going to come with a tri-merge credit report, which means all 3 of the major credit bureaus, as well as a copy of the credit scores. When reviewing the credit report information, make sure that you reach out directly to the credit reporting agencies reporting the information in order to correct anything that's inaccurate. If you need more help with navigating through the credit report itself, or you want some tips on how to improve your credit scores, check out my video with credit tips for home buyers, and that will help give you some more information specifically pertaining to your credit. Once you pull a copy of your credit report, you can move on to step 2 in the home buying process. Step 2 in the process, we're gonna dissect your bank account. Don't be alarmed, you're not gonna share it with me or do anything with it. This is for your own personal use. We're gonna go a little bit old school. So what I want you to do is get a notebook and a pen and then come back over to the video so I can walk you through what we're gonna do next. From here, we're gonna log into your bank account. You may be able to do it on your phone. If you have a computer and you can pull it up on the computer, that might be a little bit easier. However you want to handle it is fine. And if you bank with multiple institutions or have multiple bank accounts, that's okay too. We're going to do this one bank account at a time. So log into your bank account, get your account pulled up, and then I want you to take your notebook paper and I want you to draw a line down the middle of it. On one column, we're going to write withdrawals and charges. On the other column, we're going to write deposit. Then we're gonna pull a 30-day transaction history from each bank account that you have, and we're gonna physically write down line by line every single transaction that you've done with that bank account in the last 30 days. As you're taking the information from your bank account transaction history onto your paper, you're physically gonna write the date, the creditor or institution that the money came from, and then you're gonna write the amount. So for instance, if you got a paycheck, it's gonna say, let's just call it February 1st paycheck and the amount of your actual deposit of your paycheck. Then if you went to Starbucks, you're gonna write the date. February the 2nd, went to Starbucks. How much did you spend? And we're gonna do that line by line through your bank account for the last 30 days. Again, if you have multiple accounts, we're gonna do it for every bank account that you have. This process might take you a little bit of time depending on how many transactions you have. That's okay, take your time. Once you have all of the transaction listed on the paper, then we're going to either circle or star or highlight or just make a note. And what we're really looking to identify with these transactions are which of the transactions are absolutely required. What are your set bills, expenses? Which of these transactions are required for you to survive? And then secondary to that, we're going to write everything else. All of your miscellaneous spending, your Starbucks trips, your eating out, gifts, bars, groceries. We're really gonna kind of categorize them based on whether they're absolutely required or whether they're optional expenses that you're spending your money on. Once that part is completed and you have every transaction listed out on your paper, you're gonna wanna repeat that for any additional bank accounts that you have. What we're really trying to do is simply identify your spending, what you're spending your money on, and be able to visualize that spending so that you 100% are comfortable and confident in all of the subscriptions, all of the monthly automatic payments, and everything else that's happening in your bank account that you might not necessarily realize unless you do this activity. The second thing we're trying to figure out from this transaction breakdown is, do you have money left over to either save or to spend on a new house payment? Many first-time homebuyers either live rent-free with family or they're paying rent currently. If you're not paying rent right now, this is the most important step in the process. After looking at all of your expenses and all of your income, what we really want to see is how much money do you have left over every month to save or to spend on a monthly payment for a mortgage. If you're not currently paying rent to live anywhere right now, what I want you to set up is a savings plan for yourself. By knowing and understanding all of your current income and expenses, you're empowering yourself to make smarter financial decisions. I'm gonna put some app links in the description of different apps that you can look at to help with budgeting and to help you with managing your finances. These are completely optional. I just appreciate having access to those types of resources. If you need any specific help with this, just reach out to me. You can comment, send me a message. I'm happy to walk you through and answer any questions that you might have. Now that we've got our credit and our bank account analyzation complete, we are gonna move on to a budget. Budgeting is probably one of the most important steps in this process, if not the most important. In the description, there's a link to a really simple budget. There's also apps that you can download on your phone to help you with budgeting. But what we really need to dissect here is how much income we have coming in and how much expense we have every single month. And so we're gonna look at this on a monthly basis. So we're talking about monthly income and monthly expenses. When you're creating the budget, it's important to be realistic. If you're unsure about the cost of something, then you really want to make your best guess, but maybe pad it a little bit higher than it actually costs. Since you just went through your bank account, you should have all of your expenses written out, and that's really gonna help you prepare to write the monthly budget. A budget is not something that you do one time. A budget is something that you write out with specific intentional information about your income and your expenses, and then you're gonna follow that budget every single month. And so your budget should have an estimated and an actual. And every month it's important to go back and look at your budget and see how you did. What we're really trying to uncover with the budget is, do you have the affordability with your current income and your current expenses to buy a home? The reality is the answer might not be yes right now, and that's okay. We're trying to prepare and empower you to buy a home, whether that's today, tomorrow, or in the future. What I really want to do is help you be empowered and prepared. When you're going through your budget, if you're not currently paying a rent expense, we want to go ahead and put an amount in that column. This could be your proposed or projected amount for a monthly payment. That's going to be really specific to you as far as how much you put there. But In most areas, that number is going to be somewhere between $1,200 to $2,000 a month for first-time home buyers. If you're really serious about buying a home and you're not currently paying rent, you want to start paying rent into your savings account every month. The savings account should be an account that's completely separate from your normal bank account that you use for all of your purchases and all of your deposits. I like to suggest to people to set it up through your direct deposit from your employer, and it would be just a secondary direct deposit account that you're going to use where whatever amount you're setting up in your budget is actually going to go from your paycheck into your savings account every single time that you get paid. It's really important to prepare yourself to take on a mortgage payment expense. I like to suggest 6 months of mortgage payment savings payments in order to prepare yourself to buy a house. If you set a budget, you follow the budget, and you're able to save monthly mortgage payments for at least 6 months, you are truly setting yourself up for success and affordability of purchasing a home. Congratulations, you made it to the final step in the How to Buy a Home series. Step 4 is finding a lender and obtaining a pre-approval. You've done all your homework, you know what your budget is, now you're ready to actually apply for a loan. The pre-approval process has to be done before you can start looking at houses or touring homes in your local community with real estate agents. It's important to find a lender that has access to first-time homebuyer products, grants, and other things that may be available in your area. Simplified, the pre-approval process is going to typically start with an application. Most lenders have either a mobile app or an online platform where you can simply go in, fill in the blanks, and complete the application in about 15 minutes. A secondary option to that is to do the application over the phone with the lender. Whichever route you choose, just make sure it's the best option for you and it's the one that you feel most comfortable with. When you go through the mortgage application itself, it's going to be kind of similar to obtaining your credit report. There's going to be a lot of personal and financial information required for the application. Your name, date of birth, social security number, your address, your employer, your income, your assets, all of those are going to be important questions and information collected on the application. Once you've completed and submitted the application to your lender, the lender's then going to go into the application. They're going to do a hard inquiry on your credit report, and they're going to analyze your income and all of your financial information to see what programs you qualify for, if you have access to first-time homebuyer grants and loans at that stage. That's typically where that's identified. They're also going to be able to tell you how much house you can afford and what the monthly payments are tied to those different price points and loan products. When you finalize the pre-approval process, your lender should discuss all available product options with you, monthly payment options, and then you're ready to physically go out and start looking at homes. Here are some important things to keep in mind when you are ready for the pre-approval process. Number 1, even if you qualify for first-time homebuyer products and essentially 100% financing, it's still important to know that buying a home has some out-of-pocket expenses. Once you find your house that you love and you're ready to put an offer in with your real estate agent, the first thing that's going to happen is you're going to submit an offer, a written offer, in the form of a sales contract or purchase agreement. During the time of writing that offer, you're also going to commit to providing a good faith deposit or escrow deposit. It's called different things in different places, but basically what it means is if the seller accepts your offer, then you have to provide a deposit on that contract saying that you're going to follow through with the terms of the contract. This number varies. I've seen it anywhere from $150 and $1,000. It really just depends on the home that you're buying, the market that you're in. There's a lot of different factors. Talk to your real estate agent about that. But I think it's safe to just assume for your own budgeting purposes, somewhere between $500 to $1,000 of earnest money will be given at the time that your offer is ratified, which means accepted by the seller. The second upfront expense when going through that process typically is a home inspection. Most lenders don't require home inspections, but they are an inspection that's done by a licensed home inspector. This part is handled by your real estate agent and a really thorough inspection of your property to make sure that there aren't any major issues. Your contract will identify what options you have with your home inspection, but the cost for home inspection also varies. I think it's safe to assume a $500 home inspection fee for that. So for budgeting purposes, go ahead and just assume $500 for home inspection. Again, that might change a little bit, but I think that's a pretty safe number. The third expense while going through this process is going to be your appraisal fee. A lot of appraisals and lenders charge appraisal fees up front. The reason for that is that appraisers are also licensed and insured third parties who perform an appraisal inspection of the property to make sure that, number one, it's worth what you're paying for it, and number two, that it meets lending, state, and local health and safety codes. So the appraisal is required typically when you purchase a home, and that fee typically runs somewhere between $500 and $600, just depending on the lender and the appraiser and the market that you're in. So let's just say it's safe to assume another $600 for an appraisal. Once you find a home that you love and you go under contract, typically that contract is written for a 30 to 45 day closing time frame. You can safely assume that once you go under contract, you're going to need access to all of the funds that we just talked about up front, and then you will be ready to close on the property and move into your new home within 30 to 45 days of contract. I hope that this series helped you and helped explain the home buying process to you so that you can be empowered and prepared to successfully go through that journey. I'd love to hear your stories. If you followed these videos and you followed the instructions, please share your story on the social platforms and let me know how this impacted you and your family.